But thank you all for joining today. My name is Rehan. I'm the CEO of FinTech Australia. I would like to, of course, begin today by paying my respects to the lands in which we are based out of. I am based in Melbourne, which is the land of the Wurundjeri people of the Kulin Nation, and pay my respects to their elders past, present, and emerging, and also to the lands in which the others in this webinar and you are all based out of as well. So thank you. Thank you for joining today. As I mentioned, I'm Rehan. I see some familiar faces within the attendees as well. Just one key housekeeping rule. If you have any questions, feel free to put it in the Q&A section. And we will get through it whenever we can. You don't need to wait till the last minute. If it is aligned with the question we've already asked or someone is talking about, then we could jump right into that question if it's okay with the panelists as well. But thank you all. I would love to, of course, firstly, thank you all for joining, but also thank you to the team at Vanta for organizing this and helping us put this panel together. We have Johann here, who will be on the panel and will be sharing some more insights about this. Extremely important and relevant topic for a lot of our FinTech members as you work with banks and supers, understanding how you remain compliant and manage risk is extremely critical for your organization. So we have some key thought leaders in the space who would share their perspectives, their understandings, and how they could better help you and support you navigate through these, evolving times when, these regulations continue to evolve and ensure that, we're keeping the consumers safe and these businesses safe and compliant as well. But thank you all. Enough from me. I'd like to start with quick round of introductions. We have two Davids, which makes it fun for me to point at which David I want to raise a question to. But so I'll start with Johann. You can probably introduce yourself first before I get to David.
No, thank you so much, Rehan. Appreciate that. Hi, everybody. Nice to meet you all. My name is Johann. I am a senior account executive for Vanta, sponsoring the podcast today. And so you'll see it up on Rehan's screen and my screen, wherever he is on it. But yeah, super excited to have the conversation, speak with both Davids, and really dive into CPS 230 and 234. So thanks for having us, Rehan.
Thank you. And over to David Van Gogh first from Amstelveen.
Thanks, Rehan. So David Van Gogh, I run Amstelveen, and we're a specialist risk and compliance consultancy operating across Australia and New Zealand. We do a lot of work in financial services, so with the regulated entities that are your customers, so banks, insurers, superannuation funds, and the like. And we also work with the broader industry, so fintechs and service providers to those entities. So really looking forward to the discussion today.
Thank you. And over to you, David Rountree from Allens.
Thanks, Rehan. So yeah, David Rountree, I'm a partner at Allens in our technology and data practice. So in my practice, I kind of deal with CPS 230 and 234 on a daily basis, kind of not both from a kind of regulated entity side, so dealing with the incoming changes and what that means for a kind of regulated community, and also on the fintech side and grappling with how you engage with the regulated communities and what you need to have in place and how you have to manage this transitionary period. So again, very excited to be here to talk and look forward to the discussion.
Thanks, David. I'm going to jump right in and see how fast we can get through this. I'm sure you're all passionate people, so you can go on about some of these topics. So let's try to really narrow it down and keep some room for Q&A as well at the end. But let's start with a quick intro for those in the room who would like a little more of a better understanding of what is CPS 230 and CPS 234. So Johann, I'll start with you. You can start with giving a quick intro there.
Yeah, absolutely. I'm pretty sure if anybody plays within these fintech regulated spaces, or if they're some of your customers at the end of the day, by proxy, you should be adhering to CPS 234 today. Coming July 2025, you should probably be looking to follow something like a 230 internally yourselves, or at least have some sort of security frameworks up and running. That is, by the way, where Vanta fits into the picture, with the likes of Amstelveen and David and some of the partners that we do have. But let's start and wind things back a little bit. I think if we go back to like July 2019 is when CPS 234 really sort of raised its head and officially took effect. I'm going to say the reason for that, also the real catalyst for it, was that cyber attacks were really on the rise. Think things like global ransomware, we were thinking banking hacks, and especially third-party breaches. So that CPS 234 play was very much focused on that specifically. APRA had effectively come in and said, yeah, look, everything is pretty decent, but those regular entities really can't consistently be handling things the way they are right now. And 234 was effectively dropped mid-2019. I was actually working for a third-party risk management company at that point in time. But it really set the baseline for information security hygiene across banks, insurers, and super funds. Again, what really drove those were the data breaches. Think those Optus, Medibank style events. The rise of it was probably because a lot of these different organizations were thinking about outsourcing a lot of the work they were doing, and there was a lot of cloud usage happening over that period of time. We're also just entering that whole COVID phase. But there was also increasing regulatory scrutiny, like a lot of public outrage around some of these breaches that were occurring, specifically within these large organizations. So, and they weren't really safeguarding any of the personal data. I think I was affected in a couple of those breaches, but so happy to say that it kind of drives where we are now. And I think there was also a lot of international pressure coming from it. So APRA really needed to align with what global cyber expectations look like. Think those NIST, those ISOs in that regard. And so we've really gone down this road of CPS 234. The core message for 234 at the end of the day was, you can't just outsource responsibility anymore. If the data is yours, you need to protect it. No excuses. Where have we now evolved into? CPS 230, which is really going to be based and focused around operational risk management, coming into effect really soon. So for a lot of these entities, if they don't have it in place, good luck to you. I would say you better already be ready for it. History again, why did they effectively bring it out? After years and years of banking royal commission, system outages, risky vendor dependence, I would say APRA realized that many of these different institutions didn't really understand their operational risks, let alone have backup plans in place. So the evolution, it's really an evolution of several different standards. Think your CPS 220, which was risk management, your 231, which was outsourcing, and then 234, which is really around that information security management, and they rolled it into like effectively one mega standard. Again, what's really driven it? High profile service failures and system downtime as an example. Think payments that went down over peak periods, and I think we've all been affected by those. Increasing complexity of various different tech stacks in those vendor ecosystems. I think there's a major drive around that third-party risk at the moment. I'm sure most organizations that's sitting on the call today have gone through security due diligence questionnaires. I think we love those when they drop at 5 p.m. on a Friday. And then really also a push for complete resilience is what companies, as what's driven this 234 component, especially post-COVID, where digital operations has really become the business itself. The core message I think that APRA's trying to push with this is it's not just about risk anymore, but it's really now about resilience, knowing your critical operations, planning for impacts, and testing your backup plans effectively. And one of the things that I will say with it from my experience, I'm actually seeing that the EU is starting to, or EMEA effectively is starting to adopt various different variations of a CPS 230 internally. They've actually been trialing it out there with numerous different businesses. So it's going to have a global impact, and it's going to affect everybody in the ecosystem or across the chain itself. But hopefully that gives you a little bit of insights in terms of CPS 230, 234, at least at a high level. I'm sure the rest of the team will dive into it too.
Thanks, Johann. Yeah, it's interesting because we recently hosted a reverse banking pitch event as well, and that was all about the opportunity for how can these early stage fintechs have the opportunity to work with banks, and the level of understanding this element of their business and how they can work with the banks is extremely critical. But thank you, and Vanta, I guess, was at the right time, at the right place to be able to support a large number of fintechs. So thank you. Moving on to Alan's from a regulatory perspective. So David Rountree, what are some of where are we at currently, and what are some of those pending regulatory changes that we expect?
Yeah, thanks, Rehan. I think I've been asked to summarize the changes in 5 minutes, which I don't think I won't go through them chapter and verse, but I think in terms of where we're at. So as Johann flagged, we're 1 July 2025 is when CPS 230 is going to come operational. There's no change on 234. That's kind of business as usual. And it's kind of, it comes into effect on 1 July, but if anyone's been dealing with the regulated community, it's been a transition that's been happening for a while. There's been a lot of work from the APRA regulated community to get ready, and people have probably already seen the impact of that in engagements for quite some time, and we'll continue to see that throughout a transitional period. But on 1 July 2025, some existing prudential standards fall away. So that's 231 about material outsourcing, 232 on BCP, I think 220 on risk management. They, as Johann said, get brought into the super standard of 230. And I guess in terms of like where are those changes from those, if you kind of at a high level, I think there are kind of three kind of focus areas of that. One is that operational risk governance. The second is on that business continuity piece. And the third is really around managing service providers. So to go through those really quickly, I guess on the operational risk governance, that's primarily going to be the governance requirements on the regulated entity, and they're the regulated entity's governance requirements. But from the kind of impact that is going to have is what the ask is a real uplift in that level of accountability and governance requirements and the expectations that are being set on the APRA regulated entities. And what that's going to play out through is how they manage and operationalize and test all of their risk frameworks to deal with operational risks. And again, as Johann flagged, it is actually asking them to fundamentally shift from have a document, have a thing, to a real focus on outcomes. So what is the operating effectiveness of these processes, and how is that managed, governed, tested, reported on internally? And so that will play out practically with how organizations are dealing with this through the real increased focus on what that governance is and how you are testing and managing that. I guess the second bucket, business continuity. So having requirements to have business continuity plans for APRA regulated entities is not new. But what is kind of a couple of the kind of newer concepts from a CPS 230 perspective is pretty more prescriptive requirements around a couple of concepts. Particularly, the first is around defining and understanding your critical operations. So having the regulated entity understand what operations are critical to its functions, and then requiring that organization to set tolerance levels for those critical operations and have that be managed and then operationalized through its business continuity processes and procedures. And so, those are tolerance levels on things like data loss, minimum service during a disruption, disruption to a particular operation. What is the level of tolerance that an organization will have for those things, and how is it managing its risks to ensure that it can continue to operate within those tolerances? And that is really going to play out through its service provider and value chain, because those key service providers will become a key input into that, and that's where that's that type of risk that has to be managed. And I think that question around tolerance levels is, we can discuss this more in the section, but that it's a real tension between the tolerance levels of an entity versus the tolerance level, the requirements on a particular provider that feeds into an APRA regulated entity. It's often a key kind of tension point around this. And then that feeds neatly into the third bucket, so around service providers. And so 231 was obviously there and dealt with outsourcing of a material business activity. And what 230 does is it really expands that lens about what we're talking about, because we're not just talking about outsourcing of a material business function, but it really triggers the requirement to think about your service providers if they are relied upon by the entity in respect of a particular critical operation, or they create a material operational risk management issue, or they could have the potential to. And so it comes back to that focus on service providers, how they play into the critical functions of an organization, and then managing the risks with those service providers appropriately. I think the other kind of distinction from 231 when you're thinking about third parties is there's probably the ask from APRA to the regulated community is for not just to have like their examination of their operational risk doesn't just end at the door of the service provider that they're dealing with, but it asks APRA to understand and have the APRA regulated entity have a broader view and understand not just the entity, but the entities that entity relies on and where those risks might create risks for them as an organization. So that's referred to, in 230, referred to as kind of material fourth party risk. So service providers to my service providers, and how am I aware of it? How do I understand it? Where do those risks exist? Where are they concentrated? And so it does have that kind of longer reach, not in exactly the same manner. And that's often another point of tension about how far down the chain that goes. But I guess, just again, in the interest of not spending the entire time summarizing it, I think those are kind of how I would characterize the three main buckets, but obviously happy to take questions at any point on any aspect of the standards themselves.
Thanks, David. It's that risk domino, right, that we have to be aware of. Moving on to David Van Gogh from Amstelveen. Of course, Rountree mentioned, that organizations need to be prepared. So from your perspective, what can organizations do now to be prepared or to get ready for these changes?
Yeah. So as others have mentioned, or as the others have mentioned, CPS 230 is aimed mostly at regulated entities. But I think the important thing for this audience as service providers to those industries is that CPS 230 does require them to look much more deeply at the way that their material service providers manage their risks. So that includes the way that you manage operational risk, business continuity, and disaster recovery arrangements. And as David Rountree mentioned, your own third parties. So those that you rely on to deliver services to your customers. And as he mentioned, it's particularly the case for those of you who are critical to providing services to the customers of those businesses. But in reality, all of this will also permeate to all of us, I think, in the relatively near term. But I think there's three main immediate impacts for this group. The first is that those vendor security assessments that you've had to do in the past, they're about to become a whole lot broader. So they're going to cover a whole bunch more topics, and they're also going to go deeper on each of those. So you'll be expected to be across the totality of your risk environment, both financial and non-financial, and to show that you're controlling risks effectively. And you're going to have to provide more information on your business continuity arrangements and your reliance on third-party vendors and those sorts of things. Often, those in the fintech community are asked to provide third-party assurance reports like SOC 2 and ISO 27001 reports and those sorts of things. That's going to become a lot more prevalent with this coming in, given the focus on third parties. And finally, the most operational of these is that all regulated entities are obliged to renegotiate their contracts with material service providers to include standard requirements that are included in CPS 230, and so you'll see those coming through. You'll be asked to renegotiate your contracts in many instances if you haven't already. So in terms of what you need to do to get ready for those impacts, I think it pays to be on the front foot. You really should have a good understanding, and this is also just good business practice, but you should have a good understanding of the risks associated with your business, and you should have processes in place to control those risks to a level that you think would be acceptable to your customers in the first instance. And those should include risks that could disrupt your ability to continue providing services to your customers from all perspectives, from resources, people, processes, technology, etc. In particular, you should look at financial risks like your liquidity and just your operational risks. So those associated with your internal processes, security, your third parties, and those sorts of things. And so that just having that view of your own risks will put you in pretty good stead to start with from a CPS 230 perspective. But there will come other things. There will be other things coming over the course of the next year, like as the industry as a whole increases its maturity and its compliance with 230. There will be other things that come through, like those requests for third-party assurance reports and the request to update contracts. We're recommending that you on those items, you wait and see what your customers require. There's no point really getting every third-party assurance report under the sun unless you're required to. So it's better to be aware of those of the potential to need to get those sort of things, but then to respond as you get those.
Thanks, David. Sounds pretty straightforward, and fintechs have nothing to worry about, right? But so that leads me to my first question then, and I'll leave it with you, David from Amstelveen. What are some of the biggest challenges then for these organizations when they look to implement CPS 230?
Yeah, so for the regulated entities, like even for the regulated entities, this has been a very challenging process to go through. A lot of entities, large and small, are running right up to the deadline in terms of implementation. And so I think this community will see expectations still continue to evolve over the course of the next year as their customers become more mature. I think the biggest challenge for fintechs is probably balancing the overhead of additional policies and frameworks and controls against your ability to be nimble and to build and to innovate, which is why we're all here. And so in the end of the day, that's what I mentioned earlier around managing your risks to the level where you expect your customers would be satisfied with. That's where that comes in. In the end, the balance will depend on what stage of the product build and go-to-market lifecycle you're in, what sort of customers you have, how critical you are to the provision of services to their end customers. So because CPS 230 is very customer oriented. So there'll be a lot in it, and it's not a one-size-fits-all kind of approach to things. But I think in any case, you should just have and as I mentioned, it's just good business, but you should have a good understanding of your risks, financial and non-financial, and you should have processes in place to control those risks to that level of what you think would be acceptable. And on top of that, you should probably also be able to show that you're actively improving your risk position and identifying and resolving any deficiencies. So yeah.
I would just add, I think one thing that is probably been challenging for both, again, the regulated community and those dealing with it, is that because it's new and it's kind of created a whole bunch of concepts that we're still kind of grappling with, then there's still, like, it feels like still a settling to go as to like what the kind of market will accept and what the expectations of the market will be. Different organizations have taken different views and have different risk tolerances to different aspects of the framework, and so that can make it challenging for those dealing with regulated entities. If you're getting different views of that, and the regulated community is trying to kind of solidify on an approach, but there are different views that are taken about some aspects, and then some of them are contestable, and so you kind of can end up with it's just an implementation challenge as the standard really settles in to where kind of CPS 234 is now. So CPS 234 now is like a lot of disruption, a lot of change when that was implemented, but these days people have a pretty clear understanding about what the expectations of that are and what that involves. But I think we're not quite there yet with 230, and so that I think adds complexity on both sides of the fence.
Yeah, that's a really good point, and a good example of that is fourth parties. So CPS 230 introduces this idea that third parties, so I think in most cases that's this audience, need to understand their third party environment. So effectively the fourth party from the regulated entity. And originally it looked like there would be heavy requirements of this community in that. It looks like it's been rolled back a bit to just understand who they are and how they interact with your service provision. But even still, like David mentioned, there's a little bit of ambiguity about exactly what will be required. So, and that will evolve.
Thanks, David. Johann, do you have anything else to add?
Yeah, I was going to say, probably one of the things that we see a fair amount, especially when we play with a lot of these kind of different entities too is it's CPS 230 is going to be very evidence-based, and it's going to test resilience. And I think a lot of these organizations might have certain policies in place at this point in time, and it's great that you have it on paper, but it hasn't been tested, and we haven't actually had the evidence around that just yet. So I think that's something that we'll figure out over a period of time. But then I also think that then leads into a little bit of like a cultural shift in the way that we might be working amongst teams internally. And I think traditionally speaking, for a lot of organizations, things can be very siloed, where we're already starting to see from our perspective as like a platform, I've got the legal team and the risk team and the finance team and the third-party risk management team and all jumping in collectively on these calls now. And I think there's going to be a lot more communication around that, but sometimes it's good and sometimes it's still breaking down. But I do think we'll start seeing a little bit more of ownership shifts and changes within organizations as we start to implement 230.
I was just going to say, I think the other thing to think about is that if you're not on the front foot with how some of these things are, how your vision of how you will help organizations comply and, what your processes are, what your governance, what your testing is, you're going to be led by what the APRA regulated entity says is its standard. And that can often not be a particularly flexible set of requirements. It can be, like if it's not something that's planned for, you might end up with a set of requirements that are pretty onerous because someone in legal said, "Oh, just stick the hardest thing in there, and then that'll mean that we're good."
Yeah.
And so being prepared to have difficult conversations about where that line should sit is actually a really important part of being prepared as well.
Yeah. And I think to that point there too, David, is like what you're going to end up having is, I think you alluded to it earlier, every organization is going to deem risk slightly differently. Nobody looks at it the exact same way. So those conversations is going to change from business to business. It's not as simple as like, hey, this is how we're managing it. It's like, well, how are you guys actually addressing business? And that'll roll down to the broader community.
No, thank you. On that point, David Rountree, of course, they have to be prepared. So in terms of a timeline on, how did they plan for this? What would you suggest the timelines to this would be? How do you think they need to be prepared through it all?
Yeah, well, I think as flagged, it's 1 July 2025 is when it goes in. But anyone who's dealt with an APRA entity would kind of already have come up in, like, anyone contracting now, they'll want you to be, they'll want you to deal with it as if it was in place already. So, the short answer is yesterday, but that's, like as soon as you can, 1 July 2025. I think David alluded to the other kind of key trigger point, which is going to be on any contract renewal or renegotiation point in the next kind of 12 months. So there's a transitional period for until 1 July 2026 for existing contracts, or earlier if you have a renegotiation point. So if you have a existing arrangement with a APRA regulated entity and that's coming up for renewal in the next, particularly between 1 July 2025 and 1 July 2026, then that is the point. Like, you have to be ready at that point to be able to have those conversations and demonstrate the right things. There is a bit of extra leeway on some, BCP stuff for different categories of regulated entities, but I'd say, focusing on that this next 12-month period is really the critical transition period from 1 July.
Thanks, David. That's kind of how I set timelines for my team as well. Everything has to be done yesterday. So that timeline. But one more question directing to you, since you come with that legal background, is, how will APRA supervise this? They, of course, mentioned how they investing in these enforcement teams and ensuring that they can enforce all these new changes and regulations that are coming in. But what are your insights on how APRA will supervise and enforce these things?
I wish I knew exactly, how crystal ball, and then, but based on what they say, I think there's going to be an element of both proactive and reactive, regulation on this. They are going to be getting there's more reporting to them on a number of different fronts, and those, so that on the critical operations, they're now going to get that. That's going to, from those regulated entities, they're going to start seeing things around concentration risk. They're going to start, seeing things around who they're notified about different aspects. There's a suite of different requirements on regulated entities to notify at different trigger points to APRA, and so. Yes, they're investing. I think it's probably just going to be a combination of, there's going to be some prudential reviews. There's going to be the requirement for the organization to submit their material service provider regulations, where they're going to start seeing registers, where they're going to start seeing who and where the material service providers are for their regulated community. They're going to, start seeing, where there's identified weaknesses. They'll probably build into remediation plans. APRA has a range of different enforcement mechanisms it's gonna have, both under licensing conditions. Can require organizations to hold additional capital. It can actually zero down and require an organization to change its tolerance levels for a particular thing. And that's actually a challenging thing for the service provider to have to manage, where if APRA does come in and come down. So, and there's ultimately some pecuniary measures as well. So it's a really kind of important set of changes from an APRA perspective. I think they see it as really important, and I suspect that won't just be sitting on their laurels, and they'll probably be looking for opportunities to demonstrate that they are looking at this, that the regulated community has to take this seriously. So, that's my best crystal ball. But I don't know if Dave or Johann have anything that they want to add on that in terms of anything that they've seen from their engagements, but that's kind of where we see things going.
Any thoughts, David, Johann?
No, I think that summarized it pretty well.
Cool. Okay, moving on, specifically on how these, as you mentioned, third-party and fourth-party vendors, what would the impact be on these relationships and outsourcing arrangements? Probably direct the question to you, Johann, to start with, and can you follow with the others?
Yeah, absolutely. So we're certainly seeing already, I think with CPS 234, there was already an influx of due diligence questionnaires. I think now it's going to come down to actually proving compliance or proving that you've got actual controls put in place earlier on. I definitely think more and more organizations are going to feel an impact in terms of security questionnaires probably coming their way, and they're probably going to be a little bit deeper and a little bit broader than what they used to be. The frequency of those might potentially pick up too if you're deemed a critical vendor or a high-risk vendor, depending upon the data that you might be holding or integration access and so forth. We're already seeing from numerous sort of large banking institutions and government entities that you need to have something like an ISO 27001. Yes, it is the global standard in place. I think it's probably a really good starting point initially. Maybe for some of the smaller organizations, it could be a SOC 2, but it's almost becoming like if you don't have that, you should probably get on the front foot and start to really consider that today. I'd be surprised if you haven't already. But I would definitely be looking at that, because organizations, it's almost becoming like a pay-to-play kind of thing. If you don't have an ISO, well, we're not going to do business with you because there's too much risk there potentially. So that's definitely where I see that going. But yeah, David, any of your thoughts, or both Davids, what have you guys seen?
I wasn't sure which David, but I mean, I think we've seen it already in the contract negotiation process. It does add. I mean, it adds friction to the negotiation process. It's not, and partly because of the reasons that I've said before, that it's contested. There's some contestable views and differing views taken on different things. So it's gonna have, it has an impact on time to customer. And that level of engagement, I think you need to be aware and prepared for that. You need to understand it from, your own contract negotiation process, because it can be onerous, because the expectations on the regulated entities are onerous. And I do think where I said I've kind of flagged this earlier, we've often seen that level of tension is that question around at what point do an organization, does a service provider have to take responsibility for the tolerance levels that are set by the APRA regulated entity, and in terms of their business continuity, their ability to operate through disruption, and it will largely possibly depend on where you sit in that supply chain and just your level of criticality. Like there is, in some circumstance, the answer is your tolerance levels are your tolerance levels. This is the service I provide, is one answer. Although like whether that answer is going to win you the customer and win you the business is another question. So it can be, it can be really difficult to work through, and actually you need to think about really what the impact of your solution is and what you need to be offering and like giving comfort to your customers about in terms of that resilience piece and that business continuity piece. I think the other one is just that, I think we've flagged it a couple of times, is that question about controls over your third parties. So, what level of approvals are a regulated entity going to have over your subcontractors about where you perform your services? Do you outsource services? Do you perform things from different jurisdictions? If so, what level of oversight is that regulated entity going to want? And in some cases, approval in certain critical risk areas. And that again is an area of really often friction between a service provider and a regulated entity. And so being able to understand that, grapple with that, understand the requirements that are being put on the regulated entity, and being able to come up with a solution that is replicable and repeatable within your business, not one that can create like multiple different bespoke solutions, is actually going to be really important. So that's where we see some of the kind of key, relationship impacts playing out.
And I think, we've also seen it bringing, which is a good thing, but bringing vendors closer to the regulated entities. So working much more closely together rather than, hey, send us this report and then you send it off to them and then that's it. It's an arm's length thing. Actually integrating the vendor into the discussions around the critical operations. So in one instance, we've got a super client and they were doing a sort of disaster recovery type scenario, and they actually brought in all of the suppliers that were relevant to this scenario into a room and all of the business people from different parts of their business, and then ran the scenario with them all together to say, okay, well, this happens here. How's that impact you, vendor? What would you do on your side? Okay, that's good. Then that's back up. What do we do now with that vendor over there? So a really interesting exercise, and I think good in the end for all of us. But yeah, I think in that way, I think it's bringing vendors and the regulated entities much closer together.
Thanks, David. We got a few questions, but before we jump into the questions, I'd like to ask my final question, which kind of is perfect lead up to the Q&A as well. Just some background first. So FinTech Australia, of course, represents a large number of fintechs, and they go across the board from really small founding only teams all the way up to the much larger, more established fintechs and global fintechs as well. So, the way they tackle and the way they have their team set up and how they could, manage some of these changes will be very different. So in terms of advice for some of the smaller institutions or fintechs that with limited resources, what would your advice be for taking the best approach to comply? Maybe we'll start with Johann. Of course, you can't just say, get onto Vanta. I'm sure there's... But yes,
I'll say there are solutions, but I'm going to say there's Vanta and it's going to work. But I'm a little bit biased sitting here with my sales hat on. Look, I think the reality is the days of going through an audit and saying, hey, I was audited for like an ISO 27001 or something like that 9 months ago or 7 months ago doesn't cut it for a lot of these large enterprise organizations anymore. They want to see you living in a continuous state of compliance and being able to prove it out. So one, being proactive about getting ahead of, let's say, audits, whether that is due diligence audits coming from these specific vendors, but then even doing your own internal checks, making sure that you can actually showcase, hey, we are actually adhering to the controls in real time. And often that can be done with something like a trust center. If you haven't seen trust centers, they are floating around. A lot of these different organizations are already doing things like that. But yeah, then being able to provide, let's say, those gap assessments in real time, those certifications in real times, I think that'll definitely allow them to get ahead. I even think thinking about things like your data residency options in terms of, hey, I want to understand who I'm working with and where I'm actually going to be storing that data so that it doesn't become a blocker further down the line for yourselves. Give yourself that competitive advantage at the same time. Get ready to start to assess your vendors in a very similar way that you assess yourself. I think it's like, this is part of the reason why we see, I think back in 2016, companies who had an ISO 27001, they were probably more your larger entities that were or have already gone through an IPO or was getting ready for an IPO. Now we're starting to see 1 or 2 man shops already start with their ISO 27001 and their SOC 2. And Vanta can also help with that, Rehan. So don't worry, we can help you from bottom all the way up, and David's team can come in and assist too. So and David from Alan's team will do the legal work on that. So there we go. It all works together.
Thanks, Johann. But David Rountree, then outside of a fintech, getting a strong legal partner, what other advice do you have?
I think it's just, I mean, whether you have your own internal legal or you don't, it's actually just first is just make sure you have a really deep understanding of what the ask is of the regulated entities, and so that's kind of your baseline, and that is a thing that you kind of have to invest in no matter what. As to what, I'm probably not best to say which specific tools and resources you should do. I think the most important thing from a fintech's perspective is to invest in something that is repeatable and is going to be able to be applied across multiple different customers. So you are limiting your overheads in terms of managing this across a variety of different stakeholders. So that's really like where you don't want to be investing your time is in bespoke solutions for particular customers, unless there's some absolutely business critical need for it.
Thanks, David and Van Gogh.
Yeah, so I've got 2 thoughts on this. The first is that, if you look at the intent of CPS 230, it's about making these or the customer-facing components of these businesses more resilient. And so I think if you take that intent and you apply it to your own business, and that's how can I make my product and what I'm selling to my customers resilient, and do it in a way that that's efficient and sort of balances the risk with the reward, so the cost with the benefit. I think that's the right way to go about it. I wouldn't see it as a compliance exercise, but I'd see it more as an opportunity to think real deeply about how resilient your product is and your platform is, and how you can make sure that matches the expectations of your customers. I think the second point is links onto David Rowntree's point about making it repeatable. Most of what your customers will ask for will be, the questions will be different. You'll get 100 questions, they'll all be slightly different to your other customers, but they're all the same sort of topics. And I saw that there was a question in the Q&A box from Jennifer Harrison about, what sort of policies and procedures do you need? There's going to be some standard policies and procedures that you just need to be able to show and give in response to these questionnaires, no matter who the customer is. So there are things like policies around the way that you manage risk, your business continuity arrangements, your disaster recovery plans for systems, incident and breach management processes, crisis management processes, vendor management processes, those sorts of things. If you put them together, they don't have to be long, but they have to stand on their own. Then putting them together up front allows you to respond to questions like that with, you want to know about how we manage our vendors? Here's the policy, or here's the process, and that will save you a lot of time, I think, when it comes to responding to the requests around these.
Thanks, David. Another question from Jennifer, and Johann, you mentioned this, you touched upon this, was where to start. You mentioned if you're a larger organization, you can start with you comply with ISO, but for small organizations, SOC 2 might work as well. So can you provide some more context there and some more information on how fintech should look at this?
Yeah, general guidance around that. And I think it's a great question, right? What I always like to say is, well, it depends who you're playing with, and where do you want to go from a business perspective. I think SOC 2 is becoming more and more popular locally. We're certainly seeing that. But and it is very much a US based standard, right? So if you're planning on moving there, it's probably not going to hurt to get it. ISO 27001 on the other hand, probably a little bit more policy heavy, but it is the global information security standard at the end of the day, right? So it both of them carry weight. What we are seeing is like I often look at a lot of like, well, what are the governments asking for and what are the big banks asking for predominantly? And I'm going to say we're seeing ISO 27001. Even though depending upon like if you're tech heavy and tech focused, yeah, maybe do go for that SOC 2. The reality is, do I think the implementation times are about the same? Yes, they are, but there are nuances to it. Your SOC 2, you're only going to go for one audit. It's like audited annually. Your ISO 27001, you're in it for a little bit of a longer haul. I'm going to say you're looking at like a 3-year certification, 2 audits year 1. You're going to have your stage 1, stage 2 audits, and then surveillance audits in year 2 and year 3. The reality is that a lot of these large organizations most likely already have their ISO 27001s, and if that's what they have, they'll most likely push that down on you. As most of your smaller organizations scale, they'll probably end up having both an ISO and a SOC. It's probably easier to get a SOC 2 initially if you've got the right tech stack fit, because a company like Vanta, we can integrate into your tools and systems, and we can automate about 90% of the evidence collection. So we see companies stand it up in about 30 to 40 odd working hours. ISO probably about the same, but there's just those policies and things like that. But I'm not selling Vanta. I'm just saying that that's probably the differences that I see there. But both of those really good, probably leaning a little bit more for my liking into the ISO 27001.
Yeah, presumably it would be SOC 2 Type 2 you'd tend to see, not Type 1.
Yeah, I definitely wouldn't do the reality is back in the day, yeah, people did a SOC 2 Type 1. Think of it as it's just effectively showing we do have all of our controls and our policies in place. Your SOC 2 Type 2 is effectively saying, look, yes, I've got all of these policies in place, but I've adhered to them for a minimum 3-month period of time. So I can actually showcase that I'm following what I'm saying I'm doing. More and more organizations these days would actually eliminate a SOC 2 Type 1 and go directly for a SOC 2 Type 2. The reason being is auditors will be quite open to just presenting you with like a letter of engagement, and you can even export, let's say, a gap assessment out to these customers. And for the vast majority of customers who are being audited against that, they'll be quite satisfied with that letter of engagement and showcasing your gap assessment. And hey, we do have these things in place. We're just going through that audit window right now. That's what we typically recommend internally.
Yeah. And I think to Johann's early point around that, it's really important to talk to your customers around what they expect, or your potential customers around what they expect, because even within the different standards, there are components. So some components might be considered to be more important than others by your customers. And the other thing is that depending on what you do, so whether you're just whether you're just a tech provider or whether you provide managed services, you might look at there might be other third-party assurance that they might want you to get, like an ASA 3402, which looks more at the whole process of how you use your platform and how you service the customer. So really, really important to find out what they want of you and what they're interested in before sort of heading down any particular path.
Now, I think there's going to be a few different components to that, right? That most organizations need to consider is you're going to be doing your things like your information security, which should be baseline first and foremost. You're going to then have to do things like privacy. And then I think even what we're seeing more and more of now is like AI and machine learning. Well, organizations are starting to ask you about that. So are you doing things like look at the MIA, they've just brought out the regulation there that you have to adhere to, right? So if you are utilizing that internally, well, how are you treating those kind of things? And companies will be asking you the same thing. I think every single conference that I'm going to, the hot topic for the last 24 months has been AI, and it's only warming up. So whether you are doing something like a 42001, but those are the considerations that I would have at the end of the day.
Thank you. We'll try to wrap it up soon. We have 2 more questions that I quickly wanted to get through. Next one by Jennifer again. Really interesting question, specific on how would fintechs think how critical this is for them. So, as you mentioned, some of the fintechs may consider themselves too small, and maybe, on a fourth party, so may not need to look into this, may not need to look into the details. So how do we better enable them and get them to understand how critical this is for them?
I'm happy to take that from a legal perspective, if that helps. I mean, I guess the first point to that is that it's not going to be measured by the size of your organization. So just because you're small, that's not going to mean that you can't be critical. And so the criticality is really measured by the criticality that you have to the operations of the customer who you are supporting. And so really that, that's going to require you to ask yourself, like, what is the product I'm selling, and what is where am I sitting in that, in my tech stack, in the tech stack of my customers? Where am I sitting in the kind of, value chain? Where am I sitting in the, like, how close am I to a customer? How close am I to their data? Like, what is the consequence for a customer if my product that's integrated into their service provision doesn't work? And that's the questions you need to be asking yourself, because that'll be what's driving criticality, not am I big? Now, if you're doing something, I know there's a question about an MVP stage. If you're at an MVP stage, then you're probably less likely to be critical, because you're not going to be, like, people aren't going to be implementing something that's at a trial stage into their kind of BAU operations. But if the product you are wanting to sell is something you want to be a critical part of your customers' tech stack to provide the service and the solution that they're going to do to make their life and their service better, then you probably are critical. And so that's the question you should be asking yourself. On the fourth parties element of your question, I mean, we are still kind of getting a grip on exactly how much controls around the fourth party is going to be required. I mean, at the moment, like, most of the time that we're seeing, like, the fourth parties for a material service provider are like AWS or Azure, or like those type, like, infrastructure providers that are relied on by a fintech, or like OpenAI, or like, those are the types of things that we're often seeing, where who vendors are currently putting forward as their fourth parties, as those types of vendors. So I mean, if you're sitting at that space, then you're probably at a different layer of the infrastructure. If you are truly a fourth party, then maybe your obligations going to be your customers are going to need to give visibility of your services. But I don't know if Dave or Johann have any comments on that, on either aspects of that.
Yeah, I think practically speaking, the way that we're seeing most organizations deal with the fourth party question is they're getting their third parties to report on who the fourth parties are. That's a minimum requirement. And then they're going to push down contractually the requirement. So when we go through those contract updates that we talked about, they're going to push down the requirement to do reasonable risk assessment over those fourth parties. So if you're one of those fourth parties, you can probably expect that you're going to get similar questionnaires to the third parties, because of course they're just going to copy and paste those and flow them on down to you. I think practically that's how that's going to pan out.
Thank you. And that leads to the next question by someone from the audience is, how does one physically audit the authenticity of these third-party vendors' policies?
I can take that if you like. So in terms of, I assume that this is how would the entity, like, how would the regulated entity validate the appropriateness of the vendor risk management or the vendor management framework of a third party. I mean, the first instance, they're going to ask to see it, they're going to read it, they're going to look at it, they're going to look at the sort of risks that you consider of your third parties, and they're going to look at the risks associated with your provision of services to begin with, and they're going to make sure that those are aligned. So, for example, and this kind of links into the previous question, if you provide, if you've got a relatively small organization, but you provide a service that's reasonably critical to your clients, and you used an outsourced IT service provider. Let's say they provide your infrastructure and your end user computing, and they manage your servers and that sort of thing. The regulated entity is going to want to see that you've actually really looked at the risks associated with that business and looked at what would be required to extricate yourself from that arrangement, put in place contingency measures, and those sorts of things. So it's really going to be dependent on the situation, on the arrangement, but in many cases they will go down to that level of inquiry.
Thanks, David. Any other thoughts from Johann and Rountree?
Nothing to
Yeah.
add, I don't think.
Yeah, I'll basically just say at the end of the day, to that point, yeah, if you're really going to test them, having those ISO and those SOC certifications, they're not everything, but they at least raise the bar, right? It's like you're saying, hey, we're doing what we're supposed to be doing, adding things like those pen test reports and those policies in there, set the tone. But you could always dive deeper too. You can be starting to ask these customers for, well, I actually want to see the supporting evidence that's lived there. And keep in mind, Appra's going to want to see all of these different documentations at the same time to like, how are you actually doing these things? And those could be things like change logs. They could be things like approval records and version controls. And where are you actually adhering to the SLAs that set forth to those policies and tied back to controls as an example? So you could go to that level. And I wouldn't be surprised if some organizations do start testing to that level. But the initial starting point is, well, raise that baseline first and foremost. Then you're going to be inundated with some questionnaires. You'll probably ask, a lot of those will be mitigated through your statement of applicabilities that you share or your SOC 2 type 2 reports as an example. But yeah, no, to David's point, to just you can be ready for it. It's coming, but and then just make sure that you're testing yourself internally and you've got the evidence pieces to prove it, and expect the same thing from your vendors.
Be prepared. That's the most important part here. But thank you all. Thank you for joining, and thank you to the audience for participating in this webinar as well. Last question from me to everyone here. I believe if anyone wants to reach out to you, how's the best way to get in touch with you? David Van Gogh, you can start.
Amstelveen.com.
Awesome. And Rountree?
I think my name at allens.com.au, so that works.
Sounds good. And Johann?
Contact the Vanta team. We're a full team here. Otherwise, find me on LinkedIn and add it'll be Johann.Vanta or Johann.Filmalter@Vanta.com. It's a mouthful. So just go to Vanta, connect, and say you want to talk to Johann. It's that easy.
I'd say Google works for all of us, Rehan.
Yeah, Google and LinkedIn are your two favorite places these days. But thank you all. Thank you for joining. Really insightful. I've learned a lot from this conversation as well. So thank you and stay in touch.
Thanks, Rehan.
Thanks, everybody. Talk to you then. Bye.